Hello, good morning, ladies and gentlemen. How are we all doing this morning? Trust we're all doing well and getting ready for the New York session as usual. So, just like we do on a daily basis, let's confirm that we are good to go this morning. So, if you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that I can get a positive feedback that we are good to go this morning. So I would like to see some comment, please. Let me know if you can see my screen, you can hear my voice, and let's get this started. Okay, I can see quite a lot of comments here. All right, okay, Valeric, good morning to you, Valeric. Thank you very much. Kemal, how are you doing this morning? Evolve, good morning to you. 775, okay. All right, 4114. Hey, Carrie. Good morning to you. Thank you very much. All right, so okay, Fakhak, good morning, Fakhak. All right, 5512, good morning to you all. I'm so glad to have you around this morning. So let's take this as a confirmation that we are good to go this morning. On this note, I'm welcoming you all to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be diving right into the charts, sniffing the current market structures using technical parameters to identify trading opportunities ahead of the New York session. And for those who are joining us for the first time, you are highly welcome on board. And what we simply do here on a daily basis is to come together in anticipation of the New York session to review our existing positions and then look out for more opportunities ahead of the New York session. So we have a handful of instruments that we have been monitoring since the beginning of the week. Obviously, we are going to be looking at how well the pairs are doing as we get prepared for the new week, for the New York session. So you're welcome once again. It's 10 a.m. UTC on a daily basis, and trust me, with time you get to understand how this works, and you will be able to use the information you have gathered here to make your individual decision. So with that being said here, let's dive right into the business for today. So you know how we do it. The first thing we want to be doing this morning is to check the economic calendar so that we can keep tabs with what the majority in the market are looking forward to. And one important thing about the economic calendar is that it helps us to identify better timing in ways that we can position ourselves ahead of this macroeconomic event. And this macroeconomic event most of the time serves as a catalyst to help price action move significantly well. And without price action moving, definitely we cannot make money. So we want to see what high impact macroeconomic event we are looking forward to today so that we can position ourselves ahead during and after this event to be able to catch any potential move. So this is the economic calendar here. So we shall be focusing on Thursday, May 25, which is today. And you know how we do it. We focus on high impact events that is affecting the currency pairs that we are monitoring. And for today, May 25, the event we are looking forward to is the gross domestic product annualized for quarter one. So the GDP is an index normally released by the US Bureau of Economic Analysis, and it gives us an insight into the monetary value of all the goods, services, and structures produced within the US economy. So it's a very good indicator into the pace at which the US economy is either growing or decreasing. And from the data we have here, we have the previous data came in at 1.1%, and we have a consensus projection of 1.1. So this simply means that majority are thinking that there is not really any change from what the previous data indicated. So we are going to be looking forward to what the actual data is going to be like for today. So is it going to be just as expected, below expectation, or probably beyond expectation? And obviously we are going to be seeing the reflection on the chart as how majority in the market are anticipating this event, as we might likely be seeing some choppy situation ahead of this event. And one other thing that is going on within the US economy is regards to the US debt ceiling issue, which is yet to be resolved. And that is why we have been seeing a lot of risk averse activity in the last 24 hours or so. So let's dive right into the chart and let's look at things from a technical standpoint to see how we want to be getting prepared for today. So the first commodity we are going to be treating this morning as usual is going to be the US Tech 100. Sorry, the US All Spot, sorry. So the US All Spot has been a very profitable commodity for us this week so far, as we have been buying this commodity since the beginning of the week. And if you remember vividly, we identified our key level at the $71.50 level, which has been a major determinant of price action for a couple of weeks now. And we agreed here on Monday that as long as price action remains above that key level, we will continue to look out for buying opportunity. And after spotting a very simple setup at the beginning of the week, where we saw how price action was initially trading within the $71.85 level and the $70.65 zone, we anticipated price to either break out or break down of this range for us to have a trading opportunity. And interesting enough, that day, I think a couple of hours into the New York session, we saw how price action broke out to retest that resistance line at the $71.85 level to trigger our first buy position for the week. We saw price action came back to retest the structure here, and since then price action had continued to find new highs, breaking out key structures where we also positioned ourselves to add more positions to our existing trade. So we had the breakout of the $72.50 level. We also had the breakout of the $73.50 level, giving us more opportunities to join the bullish momentum. However, during our live session yesterday, we saw this choppy situation going on between the $74 area and the $73 level, which had continued to exist till this current moment. As you can see, in the last 24 to 36 hours, we see how price action had continued to range between that $74 level and the $73.50 area to give us an insight into the level of indecision in this market. So first of all, for those who had been buying the US All Spot since the beginning of the week, well done to you guys for being on standby to have caught these opportunities. So now that we are going into the New York session today, what is going to be our plans? What are we looking out for on this chart to be able to trade this commodity today? So before we go into the details here, I would like us to go into the higher time frame, that is the 4 hours time frame in this case scenario, to see how price action has been playing out from an holistic point of view, so that we can use the higher time frame structure in relation to what we have on the lower time frame to make a decision for today. So scaling up a little into the 4 hours time frame, this was what we were able to spot at the beginning of the week. So at the beginning of the week, we considered the trading activities since the second week of the month of April, and price action had been bearish. And to further emphasize the level of selling strength in this market, we connected a series of lower highs to give us this bearish trend line. And in fact, we had a couple of trend lines here. So we have the second one here, which appears to be the temporary one, and the major one happens to be the thick one on your screen. And coupled with the trend line, we had a flat channel where price action has been ranging since the beginning of this month. So we saw price ranging between the $74 level and the $70 zone, giving us a flat channel, further emphasizing the level of indecision in this market throughout the course of this month. However, a lot of interesting activities happened since the beginning of this week, as we saw our price action broke out of that resistant line at the $74 area for the first time this week. And for us, when we saw the breakout of that structure, I think on Tuesday and Wednesday, we talked about the potentials of buyers and the potentials of sellers too as well. And we said here that will the breakout of the $74 level which happened going to turn out to be a true breakout, or is it going to turn out to be a false one? And what we said here was that if the $74 level becomes a platform for buying opportunity, then it will be a true breakout. But if at any point in time we see price action break down that $74 area, then at this point we want to consider selling the USOil spot, looking out for more opportunities. Probably price will break back down into that demand zone again at the $70 area. And in fact, in the last 8 hours now, since the early hours of today, we have finally seen a breakdown of that $74 area, as you can see here. And going into the New York session today, it's very likely that we might be selling the USOil spot. So when we scale down into a much more lower time frame, like the 1 hour time frame, and looking at the structure here, hold on a second, let me delete all these illustrations here so that we can have a clean chart. So hold on a second, I will delete all those ones. All right, so since the beginning of this week, we can see that price action has been bullish actually. And remember, the bullish momentum started around the $70.65 level, and since then price action has been finding higher lows. And if we connect the series of higher lows here, we have a beautiful trend line which has been supporting that bullish momentum. As you can see, price consistently has been respecting that trend line. So every point in time price tested it, we have been seeing buy pressure resume above the trend line. And remember, at the beginning of the week, we said this trend line is going to be our yardstick for trading activity. And what this simply means is that if price action continues to trade above the trend line, we'll feel comfortable in our buy position, while the breakdown of that trend line will be inciting the idea of selling the USOil spot. And looking at what has been happening in this market in the last 48 hours, you will see that as soon as price action got into that area around the $74.50 area and the $74.40 level, we have been seeing the sell pressure here, where buyers are finding it difficult to significantly break out of that level. At every point in time buyers try to break out of the zone, we saw how sellers jumped in to negate all their potential. And the selling pressure has continued in such a way that we have seen how price action has broken down that trend line, that bullish trend line, for the first time this week. And for us, looking at it from a technical standpoint, this is a very beautiful sign that we might likely be seeing a sell-off in this market anytime soon. Though personally, I had a sell stop order below the $73.50 level, which actually triggered my first sell position for the week. And if you had missed out on this opportunity, it's okay. Let's see how the market is going to play out in the next couple of hours. Now, what we are going to be looking forward to here, since price action has broken down the trend line, so I would like to extend this trend line a little further into the future so that we can also use it as a reference point if price action ever comes back to retest it. So since we have a breakdown of the structure, and you all know from a technical standpoint, whenever we have price action breakdown a key structure like this, we expect that one point in time there is a chance that price action will come back to either retest this level to incite another wave to the downside. Now, what we are going to be looking forward to, that is for those who had missed out on this opportunity, is that we want to see price action give us a confirmation that sellers are gradually gaining momentum. So we want to see price action either come to retest the $73.50 level. Remember, this level had been a very strong demand zone in the last couple of days now. And if we have a breakdown of that structure, we want to see price action come back to retest it, or it could even go as far as retesting the trend line. But the most important pattern we want to see here is a reversal pattern. We want to see signs that sellers are gradually gaining momentum and buyers are finding it difficult to climb back above that trend line. And if that is going to be the case, then we want to be part of a bearish move to the downside. So let's see how this is going to play out. So we are continuing to look out for more selling opportunities in this market. So let's see if price will retest the structure, and if it does retest the structure, and that will be a beautiful opportunity for us to add more position. And if you're already in this trade, if you are not yet in this trade, it will be an opportunity to join that decline to the downside. Now that we have this mapped out on our chart, what happens if price action does not go back to retest the trend line or the $73.50 level, and instead it goes through a choppy situation, something like this, within this range? Well, if this kind of situation happen at this point, then we want to mark that out and then wait for a breakdown of structure, giving us a trend continuation pattern to join that decline to the downside. A further breakdown of the $72.50 level, another very important structure which has been a major determinant of price action since last week's trading session, is another area we are going to be looking out for more opportunity if price action continues to the downside. So this is how we are going to be selling the US oil spot for today. Then another thing I would like to lay emphasis on here is this bearish trend line we identified on the 4 hours time frame earlier. Remember, I showed you a bearish trend line after connecting the series of lower highs since last month's trading session, and during the course of this week we saw the breakout of that trend line here, which incited the bullish momentum we are enjoying so far this week. So from a technical standpoint, you see price has broken out of this structure, and we might likely be seeing this as a retracement phase of that impulse leg, where price could incite another wave from probably the $72.50 level, or even go as far as retesting the trend line here, which was broken at the beginning of the week. Remember, we had the trend line, so this trend line here might come to retest the structure. And interestingly, that trend line also shares a confluence with our key level at the $71.50 area. So let's see how price action plays out with both of the structure. So we have a structure at the $72.50. We also have a structure here at the $71.50 area, where depending on how price action reacts to the structure will determine if we are going to be adding more sell position or get ready for another wave of bullish momentum. So that is how we are going to be selling the US oil spot for today. And in as much as we're looking out for selling opportunities in this market, you know how we do it here. We also want to keep tabs with the opposite direction too as well. And if we consider the fact that price action has been bullish since the beginning of the week, we cannot ignore the potentials that buyers could still come out at any point in time. And if bullish momentum happens, then this whole breakdown of structure could turn out to be a false breakdown. So what do we want to see on this chart that will make us to buy the US oil spot for today? What are we going to see on the chart that will make us change our bias from being bearish into bullish on this one? So the only way I want to be buying the US oil spot is to see price action take out all the sell positions around that $74.40 area for us to feel comfortable buying the US oil spot for today. Remember, we had a choppy situation around this area where sellers continue to negate bullish attempts, and this simply gives us an insight into the presence of sellers around this area. So if we are going to be buying the US oil spot for today, we want to see price action take out all the buy sell positions there. Then if possible, we can have a buy stop order above that area, and please take note that we could have price retrace back into structure or retest the trend line, which has been supporting the bullish momentum, to incite another wave to the upside. So if you are having a buy stop order above the $74 level, you want to have your stop loss as wide as possible to capture this bearish trend line. So you could have it at a maximum point at the $73.50 area, which will be dovetailing to about 45 to 50 pips stop loss thereabout, where we wait out for more opportunities if price action comes back to retest that trend line. So let's see how this plays out in the next couple of hours. So we already have a position mapped out right now, and we have parameters guiding our trading activity. So for selling opportunities, we want to see price action continue to trade below this trend line to feel comfortable in a sell position, while we want to see price action break out to retest the $74.40 level to feel comfortable in a buy position. So let's see how this plays out. You can mark this out on your chart, or you can screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this commodity. If you do have any questions regarding what I just explained, feel free to let me know in the comment section, or you need me to shed more light on one aspect which you really do not understand. I'm willing to be of help in that regard. So in the absence of no questions, I want to assume that we're on the same page. So I will be moving on to the next option. And the next option on our watch list for this week is the US Tech 100. Now on the US Tech 100, we have been quite profitable. And in fact, the market has continued to move just the way we have projected. And it will be a sin if you did not take advantage of this opportunity. So let's quickly look at how the week started for us on the US Tech 100. And what we saw at the beginning of the week was this choppy situation going on between the 13,825 level. So we had our resistance line for the week at the 13,825, and we had our support line for the week at the $13,745 area. And you know how we do it whenever we have this kind of simple flat channel. We want to wait for price action to either break out of the resistance line for buying opportunity or break down of the support line for selling opportunity. And as you can see here, with our buy stop order above the 13,825, we had our first buy position for the week. Price action came back to retest that structure, and price continued to the upside. And for that move alone, we had about 100 pips move thereabout before we saw this wholesale pressure begin. And during our Tuesday's live session, we anticipated a bearish move, and we identified this trend line after we connected the series of lower highs, and we acknowledged the fact that if price action breaks down this bullish trend line to the downside, we shall be looking out for selling opportunities. And a couple of hours into the New York session on Tuesday, we saw the breakdown retest of structure. In fact, the market gave us quite a lot of time to be part of that bearish move, as we saw continued retest of the 13,825, which lasted about 5 hours before this old bearish move went all the way to the downside. And we had the privilege of having multiple entries on this chart, as we already mapped out key structures like the 13,780 to add more position, 13,745, 13,675, and 13,645 during the course of yesterday's trading session. So it was quite a profitable week for us on the US Tech 100. So if you look at the first position, we saw our price move over 300 pips. Let's alone talk about the other positions we had here. So well done to everyone who had been part of this trade since the beginning of the week. Now, if you recall vividly, during our live session yesterday, we were around this point during our live session. I think we were around the 13,620 area, where I said we want to continue to join the bearish momentum all the way to the downside. And we also emphasize how the trend line here will be our yardstick for trading activities. That is, if price action continue to trade below that trend line, we shall feel comfortable in our sell position while we look out for more opportunities to join. And we also mentioned that if price action breaks out of that trend line, which also shares a confluence with the 13,640, we are going to be buying the US Tech 100. And I hope you had your buy stop order above that structure, And as you can see, we have price action move to the upside. And since then, we have had over 220 pips move. So well done to everyone who had been part of this current buy position we are in right now. And if you still have a buy position running, you know how we do it. The next thing we want to be doing is to secure this current position, as we don't want to lose out on what we had made so far. And for us to secure this position, the most appropriate area to move our stop losses right now is that area right below the 13,825. Let's give room for price action to breathe and secure the position, and let's wait out to see how price action will be reacting to this current structure. During the early hours of today, I had a buy position running again. I had another position around this area, but it's okay if you had missed out on that one. Let's see how we are going to take advantage of a trading opportunities today. Before we go into the details of what our expectation is going to be like for today, I would like us to scale up into the higher time frame so that we can have an holistic perspective into what is really going on in this market since the last couple of months before we come back down here to make our informed decision. So going back into the 4 hours time frame here, you will see, okay, I think I will have to go into the daily time frame. I think we get things more clearer on the daily time frame. We have a long-term view. Okay, so this is the daily time frame here, and what we did at the beginning of the week was to take into consideration trading activity since the beginning of this year. And if we do that correctly, you will see that we have an ascending channel after connecting the series of higher highs and higher lows in this market, and price action has consistently respected and traded within that range to further emphasize the strength of the buyers. Now, something interesting happened during the course of last month where we saw price action finally breaking out of that 12,800, a level which has been a very strong selling niche since the month of August of last year. And since the breakout of that level, we have seen a situation here where price action had continued to find higher highs and higher lows. Now, currently, we are at a very critical point in the market where price action is currently trading above that 13,800. And if we go to as far back as the month of August last year, we saw that area was a strong selling niche. And if we go to as far back as January of last year, we saw how that same area has been a major determinant of price action. In fact, till April of 2021, that level has been a major determinant of price action. So we have seen that level serve as a buying niche at one point. It has also served as a selling niche at one point. So we are at a critical point in the market, and this is evident if we consider what has been happening here since the last trading day of last week. We can see that excuse me, price has been a little bit choppy since it got into this area. So the point right now is that will this turn out to be a trend continuation pattern? So if price breaks out of the 13,925 level, this will turn out to be a trend continuation pattern. But if price action drops below the 13,800, it's going to turn out to be a reversal pattern that might incite a sell-off in this market. So with the information we have here on the daily time frame, we have a better perspective of what is going on from a long-term view. So with this information now, let's scale back down into our 1 hour time frame to make an informed decision for today. So right back on the 1 hour time frame, let's dissect the current structure from a technical standpoint. Now, looking at what happened here since the last hour of the New York session yesterday, we saw how price action was ranging between the 13,825 and the 13,780. This lasted about I think 10 to 12 hours thereabout before we saw the breakout of the 13,825 level, which is a very good sign that buyers are still very strong in this market. Now, for those who had missed out on the breakout of the 13,825, we want to remain patient here, as there is a chance that price action could still come back to retest the structure that was broken earlier to incite another wave of bullish momentum. So on the US Tech 100 for today, we are holding on to a bullish bias, waiting for more opportunities if price action comes back to retest the 13,825 to add more position to our existing trade. And if you are not yet in the trade, this will be an opportunity to be part of the trend continuation to the upside. So please note that those who still have a buy position running, kindly move your stop losses. We've already projected somewhere right below the 13,825 to secure the current buy position. So let's see how price action plays out going forward. It's still looking very bullish at this point, and let's remain bullish in that regard. Let's look out for more opportunities above that level. Now, if you are considering selling the US Tech 100 at this point, well, I will say that you hold on that expectation at this point, as the buyers are really strong in this market. So it's not reasonable looking out for selling opportunities at this point. And if it so happens that price action breaks down our key level, remember we have a key level at the 13,780, which has been a major determinant of price action. So if price action ever breaks down that level, I think that is when we can start considering selling the US Tech 100. And I doubt if that will happen today. But if it does happen, we want to see a breakdown. Please note that you are not going to be jumping into conclusion by having a sell stop order right there. We want to wait for confirmations to happen, which will reflect on the chart as a retracement or a retest of the structure, where the appearance of selling pressure on our lower time frame will now give us the privilege of joining a bearish move. So unless price action breaks down our key level, we are not looking out for selling opportunities in this market. So that is that on the US Tech 100 for today. If you have any questions whatsoever, feel free to let me know in the comment section. I can see someone here is asking us to do something on the XRP, BTC, and Ethereum. I'm not sure I'll be able to treat all the three you've mentioned here because of the time we have. We still have a handful of instruments that we are going to be reviewing, and I could take one out of these three at the end of close to the end of the session. So let me know your point of preference amongst the three. Is it the Bitcoin, the Ethereum, or the Ripples? Let me know which one you want us to treat amongst the three, and I will try to do justice to that towards the end of the session. All right, so in the absence of no questions, I want to assume that we're on the same page here. So let's move right into the next pair, the next commodity for today, which is the XAUUSD. Now, on the XAUUSD, we also have been on a very profitable position on the XAUUSD so far this week, though we had some opportunities of selling at one point, and then we had the privilege of buying too at one point. So I would like us to look at how the week started for us, how we sold, what made us sell, and what made us buy the XAUUSD before going into the details of what our expectations will be like for today. So at the beginning of the week, if you were with me on the XAUUSD, we acknowledged the 1,980, which happens to be our key level for the week. And you know how we use our key level here. If you have been with me on the Extreme Speed Live, you will now know how we use our key level. So what we do with our key level is that it helps us to position ourselves for either a buy or a sell. And if price action trades above the key level, definitely we want to be looking out for buying opportunity. And if price action trades below the key level, we want to be looking out for selling opportunities. And if you look at what has been happening on this chart since the beginning of the week, you will see that price action has been trading below that key level. At every point in time, price action comes into our key level at the 1,980. We saw our sellers jumped in to negate all bullish attempts. And at the beginning of the week, to make things a little bit easy for us to identify potential trading opportunity, we captured this old chopper situation at the beginning of the week, where price action was ranging between the $1,982.35 level and the $1,971.50 area to give us a channel to work with. And you know how we do it whenever we have this kind of simple setup. We want to see price action either break out of the resistance line to give us a buy opportunity, or we want to see price break down the support line to give us a sell opportunity. And the latter was what happened here, as we saw price action break down the support line, did a couple of retests of that structure to trigger our first sell position for the week. And we were lucky enough to ride those move all the way to the downside, and price action moved about 180 pips in our favor before the resumption of this buy pressure in this market around that $1,957 level. And if you recall our ideas on Tuesday's morning live session, we acknowledge that demand zone here, which has been consistent since last week Thursday. As soon as sellers come into the structure, we saw how buyers negated all the bullish attempt, all the bearish attempt around that area to give us a very wide channel, which further emphasizes the level of indecision in this market. And on Tuesday, for us to capture this bullish expectation, we scaled down into our lower time frame. If you remember, we scaled down to, I think, the 15 minutes time frame, where we identified a simple setup. So this is what we saw on the 15 minutes time frame on Tuesday to capture that bullish momentum. So we saw this old reversal pattern right within our demand zone, like a double bottom structure. Then we had the neckline of that reversal pattern identified at the $1,960.50 area. So we were waiting for price action to break out, retest that level to give us an opportunity to buy, which was exactly what happened. Exactly a couple of hours into the New York session, we saw the breakout retest, and it was at this point we had our first buy position for the week. And remember, we also had the key level at the 1,964 identified to add more position to our existing trade. And we were lucky enough to ride the move all the way to the upside, which gave us quite a significant amount of pips there. Let's see how many pips that was. So we saw price move significantly to our TP target at the 1,980 with roughly 200 pips on the first position. We also had about on the second position about 160 pips on the second position. And remember, we also had another position at the breakout of the 1,971, which also gave us about 100 pips before this old bearish momentum began. And like I said here yesterday, that after price action broke out of this trend line, remember we identified this trend line at the beginning of the week after we connected the series of lower highs, and we said something here that if price action breaks out of this trend line yesterday, as we said, that there is a high chance that price action will come back to retest that structure, as you can see. And in the last let's say 15 to 18 hours now, we have witnessed a situation here where as soon as this bearish momentum dropped into the structure, we have been noticing some buy pressure around this area, giving us a clue that price might likely be retesting that structure one more time to incite another opportunity to buy. Okay, I'm sorry about that. I think we had a break in transmission. Let's confirm that we are still live. So if you can see my screen, I think I just saw that we were out of we just went out of the live session. Let's see what's going on. So please kindly confirm if you can see my screen so that I can be rest assured that we are still on the same page together. So if you can see my screen, please let me know in the comment section by typing hi in the comment section, please, so that I can get a positive feedback that we are all good to go. I will look out for that. So like I was saying earlier on the XAUUSD here, I was saying that we acknowledge the bearish trend line since the beginning of the week, connected a series of lower highs, giving us a sign that sellers were strong in this market actually since the beginning of the week, and we saw the breakout of that structure here. Then we also thought of the potential of price action coming back to retest that structure following the breakout of that level, which appears to be happening at this point in time. And if you look at things closely, you will see our price has been ranging just right along the trend line, giving us the technical perspective that price action is retesting that structure. Now, with this whole situation going on right now, our center of focus is going to be within this range. So in the last 15 hours now, just sitting right above that demand zone. Let me extend it out a little further so that you can capture this whole area. So we can see that that area has been a very strong demand zone in the last 1 week. So what we are going to be doing here is to focus on what is going on between the 1,964 and the 1,957, as whatever happens here will be determining where price action will be going during the second half of this week. Now, you all know how we do it whenever we have a simple flat channel like this. We want to see price action either break out of the resistant line of that channel for buying opportunity or break down the support line for selling opportunities. So with the situation we have here, and for the fact that price action is sitting on a very strong zone which has a strong memory for buying power around that 1,957, I want us to talk about the potentials that the buyers have in this market first of all, before we go into what the expectation of being bearish could be like on this chart. Now, if we are going to be buying the XAUUSD today, of course, we want to be looking out for opportunities above the 1,964, which would have been broken out of the resistant line of that channel. And one thing I want us to do here is to buy. Want to see price breakout, then scale down to your lower time frame to look out for signs of a retest of structures that buyers are gradually gaining momentum and that sellers are finding it difficult to drop back below the 1,964 to join that bullish move to the upside. So in as much as we are buying above that 1,964, I want us to be very, very careful along that area, as this whole situation here, considering the impulsive move we saw here yesterday, this buy pressure could turn out to be a retracement of that impulse leg to incite another wave of bearish momentum. So we want to be very careful when we join a bullish momentum above the 1,964. Now, when we join the bullish momentum above the 1,964, we want to be moving our stop losses accordingly, locking that situation, as anytime sellers could come in. So if price action now gets into the $1,971.50 level, a level which was our initial support line at the beginning of the week, we want to ensure that we move all our stop losses, lock in the profit, and wait out to see how price action will be reacting to the $1,971.50 level. Please mark this out on your charts, as depending on how price action reacts to the structure will determine if we are going to be buying or selling the XAUUSD for today. So if it so happens that price action breaks out, retest, and continues to the upside, we move our stop losses accordingly. As soon as it gets into the structure, we move our stop loss, lock in the situation, and let's see what happens here. So if price action breaks out of the 1,971 retest of structure, we'll be welcoming more opportunities to buy the XAUUSD, while the further breakout of our key level at the 1,980 will welcome more opportunities. But if price action gets into the 1,971 and instead of breaking out of that structure, we begin to see selling pressure right below this level, then at this point we want to consider selling the XAUUSD, as this might be the second wave of the impulsive move that started yesterday to the downside. So this is how we are going to be trading the XAUUSD if price action ever breaks above the 1,964 level identified here. Now, in as much as we are looking out for buying opportunities above the 1,964, you know how we do it here. We also want to keep the options of sellers to open as well. And if we consider the bearish momentum that started yesterday, it was such a strong one, as within 3-4 hours we saw our price action moved Over how many pips that was? Over 260 pips. That is a very, very massive move that you have there. So if we are going to be considering the strength of this impulsive move to the downside, the likelihood of selling momentum coming in cannot be ignored. Now, what do we want to see on this chart that will make us to sell the XAUUSD for today? Well, it is very important that the demand zone here is taken out for us to consider selling at all. So it's only when price action takes out all the buy positions here, by breaking down the structure significantly, well, probably with an engulfing candle, that we want to start considering selling the XAUUSD. And most importantly, we want to see some retest of structure happen on our lower time frame that will further confirm that the selling momentum here has come to stay. So this is how we are going to be selling the XAUUSD today. So we are looking out for structures right below the 1,957 to sell the XAUUSD, while we look out for structures above the 1,964 to buy the XAUUSD for today. So mark this out on your chart, or you can as well screenshot my screen so that you can use it as a reference point when you're about to make your individual decision on this commodity. If you do have any questions regarding what I just explained so far, feel free to let me know in the comment section, and trust me, I'm willing to be of help in that regard. So let's see what we have in the comment section. Do I have a feedback from the person that said we should treat Ethereum, XRP, and Bitcoin? Okay, I think I have one. Okay. Moise82 says, Moise82, how are you doing this morning? Good morning. Moise82 says XRP, we should treat XRP. And the initiator of that cryptocurrency, I can't pronounce your name actually. I think it is Russian, I guess, wants us to treat the Bitcoin. That's you've put me in a dilemma right now. I will be tending towards the initiator, which is the Bitcoin, and if we do have some time, I could look at the XRP. Okay. I can see Ilbambolo. Okay, hello Imbambolo. I hope I pronounced your name correctly there. How are you doing today? I think this is my first time seeing your comment. Are you new with us? Let me know in the comment section. All right. All right. So in the absence of no questions, I want to assume we're on the same page. So I will be moving on to the next commodity, which was introduced to us by Steamroller on Monday, and that is the XAGUSD silver. I didn't see Steamroller here yesterday. Steamroller, are you around? If you're around, let me know in the comment section. Okay, so Steamroller introduced to us the XAGUSD on Monday, and we have been quite profitable on that commodity too, as well as we have been selling this pair since the beginning of the week. So let's quickly run through how the week started for us on the XAGUSD here. So the first thing we saw at the beginning of the week was the fact that price action was bullish on the 1 hour time frame. And what we did here was to connect the series of higher lows. It gave us this bullish trend line. And we agreed that as long as price action remains above the trend line, we shall feel comfortable in our buy position while we look out for more opportunities to buy. But before we can buy, we already have a structure which we identified after monitoring how participants in this market reacted to this structure at the beginning of the week. And we had a simple flat channel where price action was ranging between the $23.90 level and the $23.64 area. And with that situation there, you know how we trade this kind of setup. We want to see price action either break out of the resistant line at the $23.90 area for buying opportunity, or we wait for price action to break down the support line at the $23.64 area for selling opportunity. And if you look at what happened here since Monday, we have actually been selling. We saw the breakdown retest of the structure, which gave us our first sell position for the week as we rolled the move all the way to the downside, giving us about 55 pips thereabout in profit. And to further maximize the bearish expectation in this market, we had key structures along the $23.50 area. We also had one along the $23.35 area, which are levels where we added more positions to our existing trade, hereby maximizing that profit. And I also mentioned here on Tuesday morning that for those who had missed out on that first sell position we had here, that there is a chance that price action could still come back to retest that structure. And to make things easy for us, we connected a series of lower highs, giving us a bearish trend line, which we have been using since the beginning of the week to guide our bearish momentum so far this week. And our live session yesterday, we also acknowledged this choppy situation going on between the $23.50 area and the $23.40 level. We of course looking out for more opportunities, so we sold below the $23.40 level, added more position at the breakdown of the $23.10 area. So it has been quite a profitable trade for everyone who had been on the XAGUSD since the beginning of this week. And if you still have a sell position running at this point, well, my advice at this point is that you want to be securing your current sell position right now by moving your stop loss accordingly. And the most appropriate area I think that we could move our stop loss to at this current juncture in this market is anywhere above the $23.30 level and the $23.20 area, as we want to give room for price action to breed with the hope that price action will continue to the downside. So this is how we are going to be protecting the XAGUSD today. So now that we are going into the New York session today, what is going to be our plans? How do we intend to trade the XAGUSD? Now we have a structure right now where price action, we have been witnessing some selling pressure along that area. That is the $23.10 area. As you can see, in the last 4 hours, we have been seeing sharp rejection of that structure. But before I talk about the retest of that level which has been happening in this market, I want us to acknowledge the impulsive move, that is the bearish impulsive move that got us to this point. Now, I would like to acknowledge the lowest point price action has been for this week, which is sitting somewhere around the $23.91, I guess. Let's put it at $23.915. I think I'll just put it right here, and we label it. So we have $23.91. Let me just put it like that. Let's mark that out on our charts. Place it right there. So that's the lowest point price action has been. So we have a situation now where price action is within that range. So if you are still in a sell position, I've told you to secure your position by moving your stop loss anywhere above the $23.10 level. Remember, we want to give room for price action to breed, so give enough space for that to happen. So what I noticed here this morning after marking out this level is that price action has been going through a choppy situation, which is looking more like a reversal pattern. For me, probably like a inverse head and shoulder pattern, which is not yet confirmed. So if this is going to be validated, definitely we want to see price action break out of the $23.10 area for this reversal pattern to mature. But one thing here is that we are not going to be jumping into conclusion at all. So if a breakout of the $23.10 level happens, we want to see price action come back to retest that structure to give us some confirmation that buyers are gradually gaining momentum. And this will reflect on the chart as a retest of that structure, buying pressure on our lower time frame. That is, sellers are finding it difficult to drop below the structure for us to consider buying. And a further breakout of that trend line will definitely be another sign that we want to be adding more position to our existing trade. So that is the only way we are going to be buying the XAGUSD today. And I doubt if that is going to happen, but if it does happen, we want to be part of that move to the upside. But considering the fact that price action still remains below the bearish trend line, we identified at the beginning of the week this trend line here. So for the fact that price action still remain below this trend line, it is more reasonable to look out for selling opportunities in this market. So if you're still in a sell position, well, we still look out for more opportunities. And what we are going to be doing here is to position ourselves below the $23.91 area to capture that move to the downside. So we are looking forward to selling at the breakdown retest of that structure. So let me mark this out here. So breakdown retest of that structure should definitely welcome more opportunities to sell at this point. So this is where we are going to be looking out for more opportunities to sell the XAGUSD. So let's be on standby to catch that one. Now, you might be asking me, why wait for the breakdown to happen if we know we're actually going to be selling? Well, we can actually maximize that profit actually, that is sell before we get to that structure. But if we are going to be doing that, then definitely we want to see key levels that will be broken on our lower time frame to confirm that. So when I scale down to the 15 minutes time frame, this is what I was able to spot here after connecting the series of higher lows. So I have a trend line which I will be calling a temporary one at this point, and then it appears price already broke down the trend line here, which is a sign that sellers are gradually gaining momentum. So we want to see price action retest the structure. If it does retest that structure, then definitely we look out for signs that sellers are gradually gaining momentum. Then we could actually join before the breakdown of the $23.91 area happens to add more position to our existing trade. So that is how we are going to be selling the XAGUSD. So as long as price remains below the trend line on our lower time frame, we look out for structures here that will support a trend continuation to the downside. Then we could join that move all the way down. Have your stop losses anywhere above this $23.90 area, about 13 pips thereabout, seems most appropriate at this point. So let's see how price action plays out in the next couple of hours, and trust me, by tomorrow we shall come here to review how well this commodity has been doing for us. If you have any questions, feel free to let me know in the comment section. I'm already out of time right now, so I have to run through all the other instruments we are going to be looking at. So let's go into the USDJPY. And in fact, the USDJPY is one of the most profitable pairs for us this week. So here we are on the USDJPY. So you can see what happened. We hit our TP target yesterday from the breakout of that 138.750 here, and we hit our TP target at the 139.700 with about 95 pips in profit. Well done to you guys for being on standby if you are taking advantage of that move. So let's run through what happened since the beginning of the week and what incited the idea of buying the USDJPY. So at the beginning of the week, we had our key level spotted at the 137.800, as you can see here. And you know how we use our key level. We want to see price action trade above that key level for us to buy, and we want to see price trade below the key level for us to think of selling the USDJPY. Now at this point, during the first 7 hours of the week, 7 to 10 hours, we saw price ranging between the 138.00 and the 137.500 to give us a channel to work with. And with our buy stop order above the 138.00 level, we had our first buy position for the week triggered. And we rode the move all the way up. Price action gave us about 70 pips move before we saw this old chopper situation begin, taking us out of that position with a small profit. And in the last 48 hours in this market, we saw our price action had been ranging. Hold on a second, let me bring this in a little bit so that we can see things clearly. So we have been seeing price action ranging between the 138.750 and the 138.400. And what we agreed here both on Tuesday and Wednesday is that we want to see price action either break out of the resistance line to give us a buy opportunity or break down the support line to give us selling opportunities. Though we had a sell position here during the early hours of yesterday, but as you can see, we were taking out on a loss on this one as we saw price action hit our stop loss. And remember, yesterday we had a buy stop order above the 138.750 as we positioned ourselves there just in case we are taking out of that sell position. We want to have a buy position triggered immediately, and that was exactly what happened, giving us about 95 pips profit as price action hit our TP target. So well done once again for everyone who had been part of this profitable trade. Now that we are going into the New York session today, what is going to be our plans? What are our expectations? Now, one thing I did here this morning was to acknowledge what has been going on since the early hours of today. And the first thing you would observe here is that ever since price action hit our TP target, we have seen a situation here where price action had been caught within a channel. So we have price action ranging between the 139.700 and the 139.400 for the last 8 to 10 hours now. And you all know how we do it whenever we have this kind of simple setup. We want to remain patient for price action to give us a signal where a breakout of the resistance line will give us buy opportunity, and the breakdown of the support line here is going to be giving us a selling opportunity. Now let's zoom out to see how price action has been playing out since the beginning of this week. And if you do that correctly, connecting the series of higher lows, we have a trend line that has been supporting this bullish momentum since the beginning of this week. And with this whole situation here, it is quite reasonable that as long as price action remains above that bullish trend line, we continue to look out for buying opportunity. However, something interesting happening here since the early hours of today needs to be taken into consideration as well. And that is the fact that since price action tested the 139.700, we have been seeing this sell pressure around this area, opening the chances that there is a likelihood that we could have a retracement move anytime soon. And if we consider the impulsive move that started here yesterday, you will agree with me that a retracement phase at this point seems long overdue. So if the sell pressure around this area continues, there is a high chance that we might likely see price retrace back into the trend line to respect it one more time to incite another wave of bullish momentum. And one interesting thing about that trend line is the fact that it also shares a confluence with that 138.750 level, the level that was broken during the New York session yesterday. And from a technical standpoint, you know that when price action breaks out of a key structure, we expect it to come back, retest this level to incite another wave of bullish momentum. So this is one of the perspectives we are going to be looking at. So let's consider the potential that retracement will happen. And if that is going to be happening, then we want to see selling the USDJPY below the 139.400 part of our repertoire for today. So we want to see price breakdown, retest of structure, signs of sellers gaining momentum to join the decline to the downside. Now, there is one thing I would like to say here. If you are not a scalper or a counter trend trader, you might want to skip this opportunity and wait for price action to come within this area where we want to see buy pressure to join the bullish move to the upside. The reason why I have said that if you are not a scalper or counter trend trader is simply because this is more or less a counter trend opportunity. For you to take counter trend opportunities, your level of attention must be at top gear, as we want to be around to move our stop losses accordingly to protect our positions as price action moves in our direction. So this is what we are going to be looking out for to sell the USDJPY today. Now, if price action does not drop below the 139.400 and it continues to climb to the upside, then at this point, a breakout of the 139.700 is going to be welcoming a buy position at this point. Now, for me, I have a buy stop order above the structure, and the reason why I'm having a buy stop order is simply because I'm profitable on the USDJPY so far this week, and I could still afford to leverage on the profit I'd made on this commodity, on this pair, to risk a buy stop order above that structure. But if you are a conscious trader, you want to see price action breakouts, then retest on our lower time frame before joining that bullish move to the upside. So let's keep this in mind while we continue to monitor price action. Screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. So that is that on the USDJPY for today, and it's on this note we end the we put an end to the currency pairs that we have been monitoring since the beginning of the week. So let's quickly treat the BTCUSD, which was introduced to us by I don't know how to pronounce your name. I don't know how to pronounce your name actually. So let's look at the BTC USD and see what to look out for on the BTC USD for today. So the first thing we are going to be doing here is to scale up into a higher time frame. We want to see things from an holistic point of view. And this is what we have here. So I would like to delete all those ones so that we can have a clean chart to look at. And then our key level at the $25,000 mark still remains valid based on this current structure. And from the look of things here, from the daily time frame, things are looking very bearish at this point, considering this selling pressure we have been noticing since the $31,000 mark. Now, if we bring out our line chart and then there is a key level here, I was able to spot at just a glance, and that falls exactly around the $27,000 mark, which I always like my key level to be in gold. So let's change the color here. So we give it a golden color. So we name it, we label it $27,000 mark, so that we can have a visual representation of what we are talking about. So we give this a gold color too as well, and then place it at the top right hand side of our screen. Now, if we bring back our candle chart right now, and considering the impulsive move, things are looking a little bit more bearish. Look at what we have here. Following the impulsive move, it's looking like a head and shoulder pattern, and we have the right shoulder looking a little bit choppy around this area. So we have something like this. And you all know, whenever we have this kind of choppy situation like this, giving us a potential reversal pattern, the next thing we want to be doing is to identify the neckline of that reversal pattern, which will definitely be a platform that will validate the potency of that reversal pattern. And with that being said, here we have a neckline situated at that $27,000 area, a very strong psychological area considering the round figure of that price. And if we go to as far back as the month of March, you will see how that level has been a major demand zone in this market. So every attempt by the sellers to break down the structure has been met with strong resistance from the buyers. So we want to take this into consideration too as well. So what I'm going to be doing here is to mark this out as a demand zone. So as long as price action continue to reject that area, the potentials of buyers still remain very, very strong around this area. So I will label this area our demand zone. I would like to make this a little bit bigger. I give it a white color, place it right inside the box, and give this okay. So we have a demand zone figured out at this point. So as long as price action trades above that area, we look out for buying opportunity. So I want to look out for buying opportunity above the $27,000 area from a long-term perspective. So now let's scale down to a much more lower time frame where we begin to see things more clearly. So here we are on the 4 hours time frame. So the next thing I will do on the 4 hours time frame here, look at after price action tested the peak here at the 31,000 area, we have seen price drop to the downside. And what we are going to be doing is to connect the series of lower highs, and this is giving us a trend line to work with. So please follow me through with this one. If you have any question, feel free to let me know in the comment section. I will be checking the comment section from time to time. So now, if you ask me that what has been happening in this market since the month of April, you will say it is bearish. But one thing here is that despite the fact that we have been seeing lower highs, we are yet to see lower lows. And for us to see a lower low, we want to see price action break down this level at the $25,800 mark. So I will give this a purple line, which will be serving as our yardstick for trading activities going forward. So we have the $25,800 mark identified here. Let's give it a purple color, and then we place it at the bottom right hand side of our screen, and then okay. So we have the 25,800. So scrolling it through here, so we can see we are yet to find a lower low. We had price rejected this level on Friday of last week, and right now we are seeing a situation here where price action appear to be rejecting that area. We have an hammer candle here, which is a sign that buyers might likely be present at that point. So if we are going to be selling the BTC USD, we want to see price action break down, retest the $25,800 area for us to join a decline to the downside from this area. So we are not selling unless price action does this. Now another thing here is price might come back to retest the trend, this key level at the $27,000 area. If it does come back into the structure, we want to see continued selling pressure. That is, buyers are finding it difficult to break above the $27,000 mark. So if we see this kind of situation, that selling pressure continues here on our lower time frame, like the 15 minutes time frame, then we want to be part of a sell move while we have a sell stop order below the 25,800 to add more position to our existing trade. So this is how we are going to be selling the BTC USD, and it's looking very bearish like this, waiting for price action to break down to 25,800. But if it so happens that we have a breakout of the $27,000 mark, at this point we would have no other choice than to start looking out for buying opportunity. But if you are a cautious trader, you want to see price action retest the 27,000 area, look out for buy pressure above the structure, then we could join that bullish momentum to the upside. So our center of focus for today on the BTC USD is just within the range here between the 27,000 and the 25,800. So depending on how price action reacts to the zone will determine how we are going to be trading this. So a breakdown of the 25,800 will welcome selling opportunities, while a breakout of the $27,000 mark will welcome buying opportunities. And I also made a caveat here where I said price action coming back into the 27,000 area and we start seeing selling pressure where buyers find it difficult to break above the 27,000, we could sell from that area, then have a sell stop order below the 25,000 area to catch that potential move to the downside. So that is that on the BTC USD. Breakout of the 27,000 welcomes buy opportunity in this market. So let's see how things plays out in the next 24 hours, and obviously we shall come here tomorrow to review how well this instrument has been doing. And it's on this note I want to call it a day here. So it has been a wonderful moment with you guys. I'm really grateful to have this key moment with you, and I'm very confident that we are well equipped ahead of the New York session, as we were able to simulate all the possible potential opportunities that could happen on all of the pairs that we have been monitoring so far this week. So we were able to look at the USOil spot, the XAUUSD, the US Tech 100, the XAGUSD, the USDJPY, and of course the BTCUSD. So we have like 6 instruments that we are going to be looking at for today, giving us more privileges of having more opportunities in the market. So let's see how things plays out in the next couple of hours. And for those who are already in a buy or sell positions whatsoever, if you have open positions right now, I told you secure your current position as we look forward to the GDP data coming up in about an hour from now, as we might likely be seeing a volatile movement in price action. So on this note, I wish you best of luck today, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this pairs has been doing, and at the same time get ready for the New York session tomorrow. Do have a wonderful evening, everyone. Bye bye.